Hello everyone, welcome to Yadnya Investment Academy. Today we are going to do a mutual fund review. Let me first explain the methodology of the review. We will list and review the fund on various parameters and rate each parameter by green, yellow or red star. Green star means good performance, yellow star means average performance and red means below average performance. In the end, based on the total number of green, yellow and red star respectively, you can take a call to buy this fund or not. Please remember, all the fund parameters we are going to discuss here are based on 17th March 2017 data as reference, and we only review regular and growth plans of mutual funds. In this video, we are going to review fund name Reliance Tax Saver Fund, which is a ELSS fund launched in September 2005. Before going into review, let's understand about fund's objectives. The fund invests primarily in equities and equity related instruments and is one of the most popular ELSS fund. Fund's portfolio has been majorly mid-cap focused, but of late they have increased their large cap allocation. It has delivered the highest 10-year SIP returns among all mutual fund equity linked savings schemes in India. It enables investors to avail tax deductions from total income as permitted under Section 80C of Income Tax Act. Now let's start the detailed review on each parameter. First, the fund belongs to Reliance Mutual Fund family, which is currently India's third biggest fund house in terms of asset under management out of more than 45 fund houses, and was established in 1995. So for being a large and very experienced fund house, we give them a green star here. Tax Saver Fund was launched in September 2005, which means it is active for more than 10 years. So let's give a green star here too for being experienced fund which has seen all market ups and downs. Fund is categorized in ELSS category as it gives Section 80C tax deduction for investing and has a 3-year lock-in. Now moving to next, this fund has an asset under management of 6,916 crores and is the second biggest ELSS fund after Axis Long-Term Equity. This high AUM shows investors' trust in the fund and its performance, so deserves a green star here too. Now let's talk about the moolah, that is the returns. We will first talk about the trailing returns from 17th March date and then talk about calendar returns. In trailing returns, we can see the fund has given very good returns. It has consistently beaten its benchmark index, that is BSE 100, and has also beaten the category average returns consistently across 1, 3, 5 and 10 years period. Category average here means all the ELSS funds combined return average. Best part is that it has beaten the benchmark and category comprehensively too. So overall trailing returns performance of fund is excellent. Now looking at the calendarized returns of last 10 years, that is from 2007 to 2016, which means returns from 1st Jan to 31st December of a calendar year, we see that there have been two instances when fund was beaten by both benchmark and category average, that is in 2007 and 2013. It has beaten the benchmark but not category 3 times, that is 2011, 2015 and 2016. There has been one instance when it beat the category but not benchmark, that is in 2009. And for rest, fund has beaten both category and benchmark 4 times in last 10 years. Now looking at this, we see very inconsistent performance of this fund, and surprisingly, even though it has beaten both category and benchmark only 4 times in last 10 years, still in trailing returns, it has beaten both category and benchmark every time in 1, 3, 5, 7 and 10 years. The reason is that when the fund beat the benchmark in 2012 and 2014, if you look at it here, it did so dominatingly. In 2014, it gave returns of 83%, whereas category average was around 52%. And in 2012, it gave returns of 46%, whereas category average was around 30%. So extraordinary performance of these 2 years catapulted fund's overall long-term returns. But having said that, even though fund has given good trailing return performance, but still lacks consistency, which can be risky in future. Due to this, we will give them 1 green and 1 yellow star for the performance. Though calendar year performance deserves a red star, but since good year's performance was exceptionally good but bad year performance was near the average, and hence we gave them a yellow star. Next important parameter is fund manager. Tax Saver Fund has been in hands of Ashwani Kumar since its inception. Ashwani is BSc and MBA grad and has been part of Fund House since 2004, so has spent decent enough time with the fund and Fund House. Ashwani also leads two other famous equity funds of Reliance called Reliance Vision Fund since Jan 2004 and Reliance Top 200 Fund since June 2007. Vision Fund is a large cap fund with more than 3000 crore AUM and has given excellent returns in last 10 years. Similarly, Top 200 is also a large cap fund with more than 2500 crore AUM and again has given returns better than benchmark and category since launch in 2007. Ashwani is really a multi-dimensional fund manager as he has pretty different set of portfolio and strategy for all three funds he manages and still manages to give very good returns in all three of them. Due to Ashwani's overall performance and stability with Fund House, this parameter surely deserves a green star. Next parameter is top stock holdings of the fund and understanding the fund's diversification. As on 17th March, fund has 57 stocks in portfolio with top 5 contributing little more than 32%. Current cash allocation is nearly 3%, rest all is in equity. Fund has decent diversification in portfolio and weightage of top 5 companies is little higher than our benchmark of 25%. Hence we give this parameter a yellow star. Next parameter is sector diversification. Fund's top 3 sectors has weightage of more than 50% and is overweight on financial and automobile sector. So for this overweight allocation, we give them a yellow star here too. Next parameter is expense. Expense ratio of this fund is 1.99%, which is pretty lower than the average expense ratio of ELSS funds, which is around 2.5%. So this parameter surely deserves a green star as it saves 0.5% returns every year for you. Now those who like numbers, let's discuss few important ratios too. Standard deviation, a measure of volatility and risk, is significantly more than benchmark and category, which means it takes much higher risk than both. Beta 2 is a measure of risk and is also much higher than the category and again shows higher risk fund is taking. Alpha, which measures the risk adjusted returns, so 12.4 alpha means it can perform almost 12.4% better than benchmark. So as expected, since it is taking higher risk, it also shows higher alpha than the category. That means it has a higher return potential too. Last is P ratio of the portfolio, which is 25 and is almost equivalent to benchmark BSE 100's P index of 24.7. So this fund definitely is giving you higher return potential, but by taking a much higher risk as well. So deserves a yellow star here. Few other important info to note about the fund is that it is a multi-cap fund with 51% in large cap and rest in mid cap and small cap. And this table shows how rupees 10,000 SIP would have performed in various time frames and prove the exceptional performance this fund has given continuously. Actually, it is the best among all ELSS fund in SIP returns. So if we calculate, we got total 6 green stars and 4 yellow stars, with inconsistent return performance being the biggest concern. To summarize, Reliance Tax Saver Fund is an aggressive fund in the ELSS category. It is a category topper which has consistently beaten its benchmark and category over 3, 5, 7 and 10 years in trailing returns. Though most funds in the ELSS category follow a multi-cap approach, this fund specifically favors mid and small cap stocks. Though in last 6 months, the fund has upped its large cap weights to half, probably due to richly priced mid and small caps. The fund is run by a long-standing and well-performing manager, Ashwani Kumar. While picking stocks, Kumar typically seeks company with strong growth prospects that he believes are trading at discount to their intrinsic value. Clearly, the unconstrained approach provides the manager adequate flexibility to choose stocks and sectors from across the board. However, such a strategy's success largely depends on manager's skill set. The fund's blistering performance in 2012 and 14 shows what it is capable of accomplishing when things fall in place. However, such instances have been limited so far, and this inconsistency sprouts risk and doubts in the mind of investors. Given that ELSS is a very competitive category, we would love if this fund continues its performance story in the future as well. This is all we have on this fund review. If you have any question, please do write in the comment section below. Have a great time ahead.